this is John Locke from Locke in Your Success, and this is the Locke in Your Success Trade and Market Update for September 8th, 2013. Before we get going, we'd like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making specific trade recommendations. Also, any trades in this presentation may or may not be live trades, and in the event they are computer simulated, we do the best we can to make sure they're as accurately represented as possible. Also, the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. And if you're watching this on SMB or YouTube, come on over to our trading blog and join our mailing list at www.lockeinyoursuccess.com. Before we get going, I'd like to just do a little bit of housekeeping. We've gotten to the point where we're covering like 5 or 6, sometimes 7 different trades on any individual update, and I don't believe that you're getting as much information as you should be doing on any individual trade with me trying to cover so many trades. So I've been talking with some students and so forth, and what we're going to end up doing is we're going to pick one trade and we're going to see it all the way through. We're going to do a thorough coverage of what's going on with the trades, and that way you'll be able to follow it and really see what's going on. And then when that one's over, we'll go ahead and do a different trade for the following month. So one month we might do a bearish butterfly. Every once in a while we may be covering 2 because sometimes they overlap a little bit. So one month, like I said, we may be doing a bearish butterfly, and then the following month we may end up doing an M3, covering the M3, and then maybe the V condor, and then so on and so forth, because we're going to be adding a couple other trades in here as well. And I want to make sure that we don't have like a 2-hour-long video and that we understand everything that's going on with each trade. For right now, the rest of this month, we're going to continue to go over all the trades, but as these trades are closed, we're going to shut them down. And as we come into the November expiration cycle, we'll be covering one trade extensively. I'll keep you up to date with the results of all the trades, but we'll keep covering one trade very, very closely, and that way we'll have time to really take a look at what's going on and be able to follow it a little bit better. All right, let's take a look at the markets. If you remember last week, we were talking about a little bit indecision in the markets. We were saying that we were bullish, but it was possible we may drop lower before we go higher. Ended up we just kind of went sideways for the week. One thing we were looking at is the Dow and the NASDAQ. We were looking to see if the NASDAQ was going to break out higher. We said if that's the case, the market's probably going to drag everything else with it, and that would be a very bullish sign for the markets, very short term. And we were looking at the Dow saying, if the Dow broke down from here, then we're probably going to drag down to a lower support level. So far, we've been holding our support levels. So it looks like the NASDAQ's close to breaking out. We do have a lot of global concerns going on here with the interest rates and Syria and all that stuff. So that can be dragging the market down a little bit, slowing down our advancement. But as for right now, we're thinking that we could still drag sideways because of the global things that are going on. However, longer term, we are absolutely very bullish and are expecting this to break, the markets to break higher. If we take a look at the Russell, as soon as it breaks out, we are expecting an aggressive up move. I don't think we're getting to 1080 this month, but we certainly could be coming and testing the backside of this 1050 level, or even 1060 by the end of by expiration time. So we shall see how that goes. All right, let's take a look at our trades. First we'll do is take a look at the October bearish butterfly. This is what we look like here. We have had no adjustments to this position. We're just sitting in some 1020 butterflies. And like I said, with the sideways market, this is doing just fine. It's up about $2,500. If we shoot over to the October V condor, this also has had no adjustments. We're sitting with our short strikes way up here at 1100, which don't seem to be in very much danger, and we have our other short strikes at 910, which don't seem to be too under pressure either. So everything's going great here, up about $1,500. If the market continues to creep, that'll be very good for us. If it backs down, then of course we start widening our straddle and bring in some money into this expiration line. That is all we have for the October trades. For the September trades, we'll start with the V trade since we're in V trade mode. The September V condor has gotten no adjustments whatsoever. Upper shorts are at 1130, which are not under any pressure either. As a matter of fact, there's not even any value in them. I could close them out if I wanted to, but why bother? The chances of us getting to 11:30 by expiration are pretty darn slim. And we have our widened out straddle because the market's been relatively flat. These are a little bit more of a concern. The 950 puts, we have a really hard breakdown. This could give us some trouble, but I'm not concerned enough about it to worry at all. And we have our long 1000 put sitting here. Probably just going to end up letting this thing expire, most likely for whatever this expiration line is here. Looks like about 34.39, which is a pretty average return on a V trade. Let's go over and take a look at our M3 for September. This trade did get some adjustments. What we ended up doing is on Tuesday, let's just go back to Tuesday morning. Oh, let's see, actually, let me go back over to, we weren't covering this M3 trade, we were covering the other M3 trade. So let me go to the other M3 trade. And let's see, this is the one we were covering. So back on Tuesday, or last week for that matter, if you remember, we were saying this really isn't an M3 anymore. We kind of, the market pulled back into the tent. Instead of adjusting it like a normal M3, we're kind of goofing around with it. And that means it puts us in a very tight position, holding this tight delta with the volatility we've been getting. So we've been kind of doing some goofy stuff here. So, like I said, don't take this as your average M3. So basically what happened on Tuesday, we were down intraday quite a bit. I ended up putting on a 980 put butterfly. And if you can see this in the T-log here, it's right here. Our 980 put butterfly, did that at the end of the day. So if we shoot down towards the end, you can see that we have this butterfly on here at 980. One of our longs canceled out one of our shorts up here at 1030, and then we have our 930 put way down in here. If you look at our analyzed graph, we're looking just like this. So like I said, the market was down earlier, bought this at the absolute worst time. And then we had a reversal, and of course on Tuesday the market started to take off on the upside. And when we did that, we ended up selling 3 1030 1040 put spreads. And then on Thursday, when the market continued up, we ended up selling one of these 1030 1050 put spreads, and then three of the 1040 1050 put spreads, keeping our delta down under around -50, which is kind of what I like to do when the gamma trend's not doing so well. And on Friday, with a continued intraday up move, we ended up selling 2 more of these 1040 1050s. So we're sitting here right now with a long at 930, we got 2 longs at 950, we have 8 at 970 for a total of 11. We have 2 short 980s, 10 short 1000s, 3 short 1040s, 4 short 1050s, and I'm planning on keeping these ahead of the market and rolling forward as the market goes up. We have 8 long 1070s, and that's all we have for those. And of course, we have our 1 long 1020 call, which is only about 64 delta, but that's because the market was a whole lot higher when we went ahead and put this on. So that's what our M3 looks like as of close of business on Friday. And let's see, the last trade we have on would be our September ROCK trade, because if you remember right, we closed the September Bearish Butterfly early at a reduced profit target. Would have been nice had we kept that on. We were in 1030 butterflies, and that would be worth a heck of a lot of money right now. So we actually possibly may have given up at least a 20% month, probably even higher. I bet we could have pulled even more than that out of this month. So, but that's what we did. We followed the guidelines. We shut it down early. And let's just switch over to the ROCK trade. If you remember, on the ROCK trade, we ended up entering this as an M3. This is actually what an M3 should actually look like had you put it on 30 days to expiration. It's been very well managed and haven't really had any trouble. What I did do during the week is, if you look at our T-log, came here on the 5th, we did 6 10-10, 10-20 put verticals. That was on the 5th, and then on the 6th we did 5 more 10-20, 10-30s, and then 2 more 10-20, 10-30s later in the day. So we just kind of keeping our delta flat on this thing because, as you know, I am bullish. And if the market runs up into this area, soon enough we may convert it over to a ROCK position. I don't know that that's going to happen with this month. We'll wait and see. If it does, then we'll go for a higher profit target. If it doesn't, we'll probably be looking at 5,000 or so. So that's all the trades that we have, and everything seems to be doing very well. If we have any changes, we'll go ahead and let you know, and we'll talk at the next update. Thank you and good night.